JAMB 2017 Principle of Accounting. Question 12. When expenses are paid on behalf of the venture, the accounting entry is to debit A, bank account, and credit joint venture account. B, expenses account and credit bank account. C, joint venture account and credit expenses account. D, joint venture account and credit bank account. For you to give a correct answer to this question, you need to understand the concept behind joint venture. As the name implies, joint venture. Joint venture is simply a venture undertaken jointly by two or more persons with a view to gaining profits. That's with a view to make profit. A joint venture indeed is quite different from partnership account or partnership. Partnership has to do with a business where two or more persons coming together bring their resources to start up a business. Of course, at the end of the day, profits are shared among themselves or between themselves, as the case may be. But in case of a joint venture, this simply has to do with a venture where already the separate parties had their own business. And of course, they came together and formed a business known as a joint venture. Of course, in this case, in the accounting record, for accounting record to be kept, there is always a need for the person in charge of the accounting to understand the fundamental principle, which is the double entry principle. And of course, the double entry principle spelled out that in every debit entry there must be a corresponding credit entry. And of course, at the debit side, there is always an account for the receiver, and on the credit side is account for the giver. So whatever form of expenses that is incurred in the cost of running a joint venture should always be debited on the bank account, because it is an account that has to do with the giver. And of course, the corresponding entry here is the joint venture account, which the expenses will be recorded. So the correct option here is option A.